just want to pick up on some of the points that Anto was making there and ask you what Citibank's or Citi's focus is for India for the next couple of years.
Thanks, Paul, for inviting me to the studio. Citi actually has been in India for more than 123 years. In fact, next year we are going to be celebrating our 125th year in India. And as you know, we exited the retail business 3 years back. And we are actually going to be focused on our core domain, which is the institutional banking business. And if you look at our position in the institutional banking business, we actually are in the top 3 in each of the business segments that we operate in India, in the Indian market, and also within the Citi world globally, we will be in the top 5 in most of the businesses that we have in India. Our focus continues to be basically deepening our coverage with our key clients, expanding our commercial banking business in terms of that being a big growth engine, continue to be the leadership position that we have in the investment banking across advisory and capital raising, both from the private and public markets, and also using our network, which is across 94 countries, to be more relevant to Indian conglomerates and also to multinationals, which is coming into India. I think this is a very big strength that we bring to the table. And if you look at the 2 businesses where we bring foreign capital in, which is actually a very core point for the government of India, because if you look at the government's plan of moving India from where it is to the advanced economy over the next 20 years by 2047, the Viksit Bharat that the Prime Minister Modi always talks about, I think it is going to be very important that you need to have access to all pockets of capital. And I think Citi is very well positioned in terms of mediating some of this capital that is actually going to come in either in the form of foreign direct investment in manufacturing, which again is a very big focus area for the government, and also the portfolio investments that comes in from different parts of the world. I think we have some market leadership position in each of these businesses, and I think that is going to be our focus in terms of how we can help clients to come into India and access the opportunity that India provides, as well as the Indian companies which are actually looking to grow overseas and try and see in terms of how they can get into more profitable markets across the world. So I think it is going to be a pure institutional focused business, and I think that is going to be our core strategy going forward for India.
Yeah, pure institutional focus. And to your point that you've exited the consumer banking side of things in India, I'm just wondering if you can unpack that a little bit more for me, considering the wealth of the Indian consumer. It looks like it's poised to explode. You're walking away from a potential good business there?
Well, Paul, if you think about it, and I can give you some stats, right? It's been, as I said, a little over close to 3 years since our exit of the consumer business. And if you look at the financials that we put out for the India business, our top line, which is the sales, which is actually today 25% more than the combined sales that we had across the consumer and the institutional business 3 years back. If you look at our profitability, that again is at least 20-22% more than what the combined profitability that we had 3 years back. And then if you look at our balance sheet size across deposits, assets, and other key parameters, we have all seen a significant growth. So basically, the capital that we released from the sale of consumer business is actually getting reinvested into the institutional business. And we want to be in businesses where we have market leadership and we have thought leadership. And therefore, from our strategy perspective, we are very clear that, institutional business is the way forward for Citi in India, and that's where we are doubling down.
Yeah, so tell me a bit about if you're planning to expand roles and where those might come from. Would you be pulling in people from the rest of the region or the rest of the world, or are you looking to hire more domestically?
Well, I think we started this capability centers, the GCC as it is called today, at least 4 decades back, when the concept of GCC was non-existent in this part of the world. And it's no more a question of cost arbitrage where we are hiring people in terms of doing the same job at a cheaper cost. But today, I think the type of work that is happening in our capability center is absolutely cutting edge. They are using artificial intelligence, both predictive and generative, in terms of trying to bring in efficiency. And if I look at the broad transmit of work that is happening in the GCC, this covers all facets, including operations, technology, finance, risk modeling, compliance and governance, etc., etc. We are spread across 5 locations in India. And as I look at the headcount today, after the United States and post the Banamex exit, Citi India is actually going to be the second largest employer of Citi globally. And this is a position that we potentially will continue, considering the access to talent that we have and the quality of talent that we can hire in India, which are basically helping Citi's operations across 80 different markets that we operate. So this is India is actually a very, very core part of Citi's overall constituent, and it's an invest to grow business in India.
So you're going to have a strong focus on commercial banking going forward. I'm wondering if you can give us a sense of how global rates, volatile capital flows, some of the outflows that we've seen from India in 2025 are going to impact foreign direct investment, or are you relying more on domestic demand?
Yeah, Paul, if I look at the foreign direct investment, I want to just break it up into two constituents. One is the gross FDI. The gross FDI continues to be quite robust, between $80 and $90 billion. That's been the case at least for the last 3-4 years. I think the problem that we are having is on the net FDI. And the reason why the net FDI is something on a downward trajectory is because of 2 or 3 things. One is we are seeing a lot of global companies looking to raise capital in India through the subsidiaries and then remit the money out, considering that Indian valuations are very rich. So therefore, we have taken American companies to the equity markets through IPO in India in the last 24 months. We have taken European company to the Indian market through IPO. We have taken few Asian companies into the Indian market through IPO. And as I look at the pipeline for the next 12, 18, 24 months, I think this trend is going to continue. We are also seeing some capital being taken out by exits happening through private equity and VCs, who are very active in terms of investments. And considering that their investments have grown quite nicely over the last 3, 4, 5 years, I think there is a money that is getting taken out. And we are also seeing some bit of outward investments happening by Indian conglomerates. So all this, if you add up, that basically subdues our net FDI. But on the gross FDI front, I think that is going to be quite positive. And especially with the 2 trade deals that has got announced with European Union and United States, I think the expectation is that, as we get more details and clients get more comfortable with the outcomes of these trade deals, there is going to be more investments that is going to come in, which is actually going to be a further positive story in terms of the China Plus One manufacturing that the government is super focused on.
Yeah, I'm glad you raised that, because within that agreement there is an intention for India to buy $500 billion worth of U.S. goods. Does corporate India's balance sheet have the capacity to absorb that much American hardware and energy?
See, I think as I look at, and first of all, we need to wait and see in terms of what are the final details of this trade deal, and I expect that that potentially is going to come over the next few weeks and months. But broadly, if I think about it, I think there is going to be opportunities around energy. There is going to be opportunity on agriculture. There is going to be definitely opportunity on defense. As you know, civil nuclear is something that the government is in the process of opening up. So there is, of course, going to be opportunity on SMRs, because India doesn't have the nuclear technology, and they potentially will be open to getting technology from United States, some parts of European Union, and even some of the Asian countries like Japan, etc. There could be further opening of financial services, we saw the insurance sector being opened up, and there is clearly a need for reinsurance of some of those high-ticket items like marine, aviation, etc., which the country is moving in that direction. And then there is also going to be more partnership on defense, which is around rockets and some of those new emerging technologies. So I think if I broadly think about it, there is going to be a lot of opportunity that is going to open up. And my sense is it's going to be a two-way street, where the labor-intensive sectors that India is always focused on, which is around textiles, horticulture, agriculture, gems and jewelry, etc., which will all again get a fill up as we look at the trade deal getting opened up with both EU and US.